cover what we call group consolidation, and the agenda will only be one, to show you how we consolidate statements of financial position. If you have a financial position, statement of financial position of the parent company, and then you have statement of financial position of the subsidiary, how do you condense them? How do you put them together to form what we call a group statement of financial position? That is a major agenda. Once we understand that concept here, by the end of the session, ladies and gentlemen, I'll be so happy. I'll count myself having achieved so many things today. So many things today. So great. And I would want us to use this easy question here. This easy question here. I'm reading here. Ladies and gentlemen, we are told on 1st April 2018, Pedantic acquired 60% of the equity share capital or Sophistic in a share exchange of 2 shares in Pedantic for 3 shares in Sophistic. The issue of shares has not yet been recorded by Pedantic. At the date of acquisition, shares in Pedantic had a market value of 6 each. Below are the summarized draft financial statements of both companies. I'm not interested in the statement of profit or loss. This I'm not interested. I am interested in today's class. I'm interested in showing you guys how to get the statement of financial position as at 31st September 08. So they have given us here for the Pedantic and for Sophistic. My role today is to show you how to consolidate. And the consolidation is an easy thing. To consolidate, ladies and gentlemen, is the easiest branch of accounting that we have, or financial reporting that we have. It's all about adding like terms, line by line, like terms of subsidiaries and parent company. Very easy thing. So, ladies and gentlemen, what do they want us to do here? What they want us to do here is something very simple. They want us in part B to prepare the consolidated statement of financial position for Pedantic as at this date. The consolidated or group statement of financial position. Great. Let me go through the charts here. Yes, great. Ladies and gentlemen, remember, as usual, any group question, you must always start with what we call the group who. You must always start with what we call the group structure. And this is how our group has been structured. We have one company called Pedantic, which has gone ahead in this case, ladies and gentlemen, to acquire some 60% shares of another company called who? Called Sophistic. Another company called Sophistic. So, ladies and gentlemen, listen and listen to me very well. What do you think of this 60%? Is 60% a small shareholding? 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 It's material. Actually, the moment, ladies and gentlemen, you own more than 50% of a company, that signifies what? Here, control, major. It means you're controlling this. This is your child. So it means, ladies and gentlemen, that this being more than 50%, it means that there is what we call control. And the companies that you control are technically known as who? Companies that we control are technically known as who, ladies and gentlemen? Companies that we control are technically known as who in the group? Are they associates? Companies that we control, I'm asking you a question. What are they? They are subsidiaries. Thank you very much, Bahar. So it means that if there is control, then the company that is being controlled will be called a subsidiary, whereas the controller here will be called a parent company. Will be called a parent company. Will be called a parent company. Now listen and listen to me very well. So, ladies and gentlemen, we can see that the parent owns what here? 60%. There must be someone else who owns the other percentage, the smaller percentage. This someone else who owns the smaller percentage, who has got know this, we normally give them a special term. Is anybody who is able to remember that special term given to this party? Who will not be having a say in the board, right? You can type there. It's NCI. It's non-controlling interest. Please write that in full. Non-controlling interest. It's NCI. Thank you so much. It's non-controlling. So the non-controlling interest here has got 40%. Has got 40%. So the students who are with me in my last class had begun this question, but I have to begin it from the beginning because now I'm consolidating financial statements. Which financial statements? Statement of financial position. So I have to start from the beginning. So no worries. At the end of the day, you'll be happy. So the parent company has 60%, non-controlling interest has got 40%. So first of all, up to here, are we together? Are we together up to here? Are we together up to here? Are we together up to here? Yes, thank you very much, Agi. Thank you very much. Now, the thing that you would want to tell us is as regards the date of acquisition and the date of financial reporting. The date of acquisition and the date of financial reporting. Please write this in full, given for those that, especially that I'm teaching for the very first time, teaching them consolidation, you must write this in full. This is date of acquisition, date of acquisition. This is date of financial statements. So they told us something very interesting here, that we acquired this subsidiary on which date? On which date? On which date? On which date? The date, ladies and gentlemen, we acquired this subsidiary. This subsidiary, ilikuwa tarehe ngapi? Ilikuwa tarehe, it was 1st April 08. It was 1st April 08. This is 1st April 08. 1st April 08. How about the financial statements given? The financial statements given, which day are they dated? The date of the look at the statement of 30th September 08. 30th September 08. 30th September, 30th September, 30th September 08. So could you kindly count for me and tell me how many months did we stay with this subsidiary in the financial year? How many months did we stay with this subsidiary in the financial year? How many months? Somebody talk to me tonight. Jackie. Hey, Jackie, you're the first lady who has gotten these months correctly. Many ladies don't know how to count these dates. This must be very special. So we have April, May, June, July, August, and then the whole of September, 6 months. Thank you so much. That is the end of my group structure. That is the end of my group structure. If you get your group structure wrongly, then you will get a 0. Once you finish the group structure, now you should never be cheated by anybody. You start opening some workings. No. Once you finish, ladies and gentlemen, once you finish this group structure concept, straight away go to what the examiner has asked you to do. What has this examiner asked you to do? This examiner in Roman 2 of the question whose agenda we are on top of today has asked us, ladies and gentlemen, to do something very simple. Has asked us, ladies and gentlemen, to give them, you start with the name of the company. The name of the parent company is Pedantic. So we call this one here Pedantic Group. So the group will always be called by the name of the parent. The parent here is called a Pedantic. So you're talking of Pedantic Group. So Pedantic Group, consolidated statement of financial position. Consolidated statement of financial position as earth. The date has been given there as 30th September 08. And then you underline nicely. You underline nicely. You underline nicely. You underline nicely. So remember how then we start displaying, structuring our statement of financial positions. It is assets vis-a-vis how those assets have been financed. We start with assets, and then we look at equity and what here? Liabilities. So we start with assets. We start with assets here. So we mention their assets. So assets, mention their assets. Remember, you are taking everything the way it has been given in the question paper. Everything the way it has been given in the question paper. It is statement of financial position that we are consolidating. So we start with non-current assets. So non-current assets, what do we have? Non-current assets, non-current assets, non-current assets, non-current assets. We have, ladies and gentlemen, the first one there is property, plant and equipment, property, plant and equipment. And the non-current assets, ladies and gentlemen, and the non-current assets, even if I'm not told, if I have subsidiaries, and the non-current assets, even if I'm not told, so long as I've got subsidiaries, of course, I must create some provision of goodwill, provision of goodwill for my subsidiaries. So even if you're not told, anytime you've got subsidiaries, you must, as a non-current asset, you must come and give us your goodwill. Goodwill of who? Goodwill of subs. You don't write in full goodwill of subs like that. Great. So, ladies and gentlemen, the moment I do that, I'm just trying to copy the general structure. I can see the next thing they want me to capture here is called the current who? The current assets. So current assets are come under the line. Under current assets, I'm looking at things like inventory. I'm looking at cash. I'm looking at those things, you know. I know you know them better than myself, but remember here, I'm reading everything as it has been structured by the examiner. So like this examiner, even simplified the work for me. He came and put all the current assets as lump sum. So I'll simply come and mention their current assets, just like that. Great. So I'll come and just write here for the sake of it. I will come and say current who? Current assets, like that. Great. And then of course I'll leave some space. You must keep on leaving space, remember. Some space here for total who? Total assets. So that's like one part of the balance sheet, one part of the statement of financial position. So from there, now we'll go to the financed by. How do we finance this? It is equity, and who? Liabilities. It is equity versus liabilities, of which we begin with equities, remember. Equities, we have share capital. You don't guess, remember. You are picking everything the way it has been given to us by the examiner. So we have the share capital. So we have the share capital here and the equity. We have share capital there. I can see retained earnings. I can see retained earnings. I can see retained earnings. I can see retained earnings, retained earnings, retained earnings. What else in this case here do you know? When we are consolidating under equity, what else do you think must we add here when we are consolidating? What else? We must have, even if it's not given there, what else must we, just like we included goodwill here, we must include something here. NCI, thank you very much. So you must come and include this other permanent source of capital, which is called non-controlling interest. Remember these guys, they have our shares, ordinary shares. We don't owe them. We shall never pay them. Whenever anyone wants, in this case here, to walk away from our company, they have to go to the stock exchange, secondary market, and get a person to buy their share. So the company will never, this is a permanent source of finance. It's an equity capital for us. It's an equity capital for us. So remember, you should leave some spaces in between because of things like share premium, which may crop in later on. Thank you very much. So after equity and liabilities, now you move on to the next thing here. The next thing, ladies and gentlemen, that these guys have, we have here retained earnings. Retained earnings, already I have that. So now I shall be able to go to the non-current liabilities, non-current liabilities, non-current liabilities. So we have the non-current liabilities. The only non-current liability that I can see there is called the 10% loan notes. The 10% loan notes. The 10% loan notes, 10% loan notes. From there, I'll be able to walk to current liabilities, current liabilities. So from there, we have the current liabilities, current liabilities. So current liabilities, fortunately, it's only one. Great. Don't have to duplicate this. I can just leave it like that. Current liabilities. So first of all, I would want to know whether you guys have been able to copy this thing all the way up to where I am. Have you been able to do that? Have you been able to do that? Right? Today, I'm not seeing any man talking to me. I don't know why. I'm not seeing any man talking to me. Seems that these guys have gone on strike. Thank you very much, David. Thank you very much. At least now I feel happy. Now I feel happy. Thank you very much. Thank you very much, Agi. Yes. Sasa nataka unisikize na unisikize makini sana. Kama kuna question unataka upate 100%. Kama kuna question unatakiwa kupata 100% ni group consolidation. Ukienda kwa exam upate group consolidation huwezi pata marks more than a half, then know that you have a problem. But fortunately that problem does not require any medical intervention, right? Group consolidation, wachana hizo zingine zote za kubahatisha. Ukishaambiwa semester mzima miezi 3, you are aware that this group consolidation, whether you like it or not, group consolidation has to over 3 months. You want to tell me you can't really grasp this thing, you will grasp it. So here we have to get all the marks. It is the easiest. So like now the property, plant and equipment, what should I do? I should take the PPE of the parent plus the PPE of the subsidiary. Just that. Don't read notes first. Don't read any notes first. Wewe kuja tu hapa kawaida, unaangalia hapa. So we have property, plant and equipment. So we have 4,600 and 12,600. We're only adding. So we have here 4,600 plus 12,600. Thank you so much. Great. So goodwill of subsidiary, this one I will need a working. Goodwill for subsidiary, that one I will need a working later on. I'll need a working later on. From there, please jump and go to the current assets and don't pick your calculator yet. Don't pick your calculator yet. So go to current assets, you are consolidating, putting figures of the parent plus figures of what year, plus figures of who, the subsidiary. The question, I like this student quite a lot. People who are positive. Yani ameingia kwa WhatsApp saizi, akapatana kuna class na akaingia na anacheka. That's the attitude really. That is the attitude really. Great. So ladies and gentlemen, here we are. So for current assets, what do? I'll take 16 plus 6,600. 16,000 plus 6,600. So 16,000 plus 6,600. Don't add anything. Don't take your calculator and then you start giving us figures, because later on, I'll be doing adjustments. Total assets wachana nayo. Enda kwa share capital. What do you know about share capital? Hey, you great students of mine. What do you know about share capital as regards group consolidation? As regards group consolidation, what do you know about share capital? As regards group consolidation, what do you know about parent only? Great. Parent only. So parent only. Group consolidation share capital is parent only. And the parent only, ladies and gentlemen, in this question, in parent peke, I like that, Steve. And I hope, Steve, now you have recovered fully. You're a young man, you should not be sick. You should become sick. So parent only, ladies and gentlemen, parent only share capital. You know, there is a figure of 10,000 of the parent called pedantic, and then we have 4,000 called for the share capital. We always pick the one of the parent only. The one of the parent only. So parent only, what do we have here? Tumesema ni 10,000 like that. Like hivyo tu. Retained earnings, the same case. Retained earnings, you pick the one of the parent only. So retained earnings also the same. Although we shall be doing some adjustments later for retained earnings, but also for the retained earnings, we always pick the one of the parent only. So retained earnings, I can see 35,400. I can see 35,400. I can see 35,400, 35,400, 35,400. Non-controlling interest I would need a working. However, this non-controlling interest is a straightforward one. Even this one is a very straightforward one. Because what I need is a non-controlling interest as at the date of acquisition. The non-controlling interest as at the door, the date of acquisition. And NCI basically will be given at the very last year. NCI, this is the NCI figure. Hapa. Utaambiwa hii ya mwisho kabisa. Pedantic has a policy of accounting for any NCI at full fair value. The fair value of NCI interest in sophistic at the date of acquisition was estimated to be 5,900. So what I'll do with this NCI, Non-controlling interest, I'll simply write the non-controlling interest value at the date of acquisition, and then I'll add the share of PERP. I'll add the share of post-acquisition profit later. I'll add the share of post-acquisition profit later. And then we go to the non-current liabilities, where I'll pick the 10% loan notes. So 10% loan notes, what do we have here for 10% loan notes? For 10% loan notes, I'm picking 3,000 plus 4,000. 3,000 plus 4,000. So loan notes here, we have 3,000 plus 4,000, like that. And then we have the current liabilities. We are consolidating, putting together things like how we are together in this room as a family. We are already consolidated. And of course, are happy to be here. We are happy to be here. So for the current liabilities, it's 8,200 plus 4,700. 8,200 plus 4,700. So 8,200 plus 4,700. I'm so sure, ladies and gentlemen, there must be somebody here who has not understood anything. And really, we haven't even begun doing the question. We're just copying. So feedback, I would want to know whether we are together, ladies and gentlemen, up to here. Is there somebody who has been able to copy like myself there? Great. Mary Achoki, thank you very much. 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 Now, so ladies and gentlemen, nikifika hapa sasa mimi nitapata marks zote. Hii nitapata marks zote 100%. Kwanza naipigia hesabu yake, nitaianzia wapi? Hesabu yake nitaianzia wapi? Twende kwa notes sasa. Twende kwa notes. Hapa sasa mimi nimeshaichorea sasa. Twende kwa notes hapa. Kwa notes, note number 1, we are picking only things that will affect our statement of financial position. Things that will only affect our balance sheet. We are told, note number 1, at the date of acquisition, the fair values of sophistic assets were equal to their carrying amounts, with the exception of an item of plant, which had a fair value of 2,000 in excess of its carrying amount. Yes, I'm speaking of 1,000, not millions. Why? Because my figures up here are captured in terms of what? Thousands. So all my pronunciations will be in terms of thousands. I must be chopping the 3 zeros at the end there. So 2 million will be 2,000. 2 million will be 2,000. So you're told, I'm repeating again, that at the date of acquisition, the fair values of sophistic assets were equal to their carrying amount, with the exception of an item of plant, which had a fair value of 2,000 in excess of its carrying amount. That's revaluation. That's revaluation. When I'm acquiring a subsidiary, I must call in a valuer who will be able to look at the figures that we have in our books, what we call the carrying out values, and compare the assets that we have, the fair values of the assets we have with the carrying. So at times we'll be having an asset. This is motor vehicle. I'll be depreciating it. So in my book, I have it at 10,000. But you see now this expert will come and tell you, ladies and gentlemen, that, hey, if you take this car to the market today, you'll be able to get 12,000. So it means that I must increase my books. I must, in this case, inflate my books to reflect the true value of the assets, the market value. So in this case here, I need to, like here, I can see a revaluation upward. It's a revaluation upward. So this is a revaluation. Like here, we can see that the fair value is higher. When the fair value is higher than the book value, it means that we need to boost our PPE. We are told here, let me repeat this very well. We are told, ladies and gentlemen, here, that at the date of acquisition, the fair value of sophistic, fair value is the same as market value. The fair value of sophistic assets were equal to their carrying amount, with the exception of an item of plant, which had a fair value of 2,000 in excess. So it's a revaluation upward. And because this is a revaluation upward, we've said we shall boost our property, plant, and equipment. Boosting means you come and add. So come here, and then you say what here, somebody, plus 2,000. This figure is being brought in at the balance sheet now. It means that it has not been depreciated. So once I have a revaluation, I must always compute what we call depreciation on revaluation. So come and give us depreciation on revaluation. Give us depreciation on revaluation. Please, working zako. Yuko mwingine anapenda copy mwalimu sana. Utapata sababu mwingine na copy kama mimi. Unajua mimi niko na board ambayo na rab. Wewe sasa yako unaandika kuchini. Right? So depreciation on revaluation. Allow me to check some comments here, please. Feel free in this case here to do what here? Yeah, to ask questions here, So depreciation on revaluation. So depreciation on revaluation, what do we have? We shall take the revaluation amount. We take the revaluation amount all over the remaining useful life. Revaluation amount all over the rule, the remaining useful life. Please andika in full. Mimi napenda sana hivi tu ya hii. Revaluation amount all over the remaining useful life. Umeandika namna hiyo kweli? Revaluation over remaining useful life. The revaluation here is 2,000 divided by the remaining useful life, which the examiner will always tell you. Like here, they told us it had a remaining life of 5 years at the date. So 5 years. So the rule, the remaining useful life is 5 years. So 2,000 divided by 5. 2,000 divided by 5, oh yeah, inakuja ngapi? 2,000 divided by 5 inakuja ngapi? Wanasema ni 400, agidankan 400. But this 400 is for which period? The 400 is for which period? How many months? How many years? This 400. It's for a whole year. For when you divide with the number of years, whatever you get, it will be depreciation per annum. But don't forget that this asset belongs to the subsidiary, and the subsidiary, we stayed with it for only 6 months. And the depreciation normally accrues with the time. Depreciation accrues with the time. So I must come and the time apportion this to get the true depreciation figure that we should charge, which is 200. So what do you know about depreciation? You will come and do what here? You will come and subtract. Depreciation is loss in value. It's loss in value. Now, as I wait for you guys to catch up with me, because I know I'm a very fast man, as I wait for you to catch up with me, could you kindly tell me, this is a figure of the subsidiary. Why was I not taking these figures here times 6/12, like we did with the statement of profit and loss? Why was I not multiplying the balance sheet parameters of the subsidiary with 6/12? Why was I not apportioning them, those figures? Thank you very much, Okewa. Reporting here is at the last date. Balance sheet is at that date, is at this date. Balance sheet does not accrue for a whole year, the last date of the financial year. Whatever assets that we have there, all of them belong to the group. So we don't time apportion. Great. Thank you so much. So, ladies and gentlemen, there I am. Now I will go to, with your permission, I will go to note number 2. I'll go to note number 2. Sales from sophistic to pedantic in the post-acquisition period were 8,000. This is what we call fake sales. There is no way you can claim that you selling goods to your family member, close family member. This is a fake sale, which we were able to subtract from our income statement metrics. Very nice. I'm not interested really with that. But I'm interested now with the statement that follows thereafter. We are told the sophistic made a markup on cost of 40%. In a group consolidation, when I see the word markup, I should know that markup is an enemy of progress. Markup is an enemy of who? Of progress. Markup is an enemy of progress. Markup is an enemy of progress. Whenever I see markup, I can see some low-hanging fruit. This examiner will be able to give me some mark there. Whenever I see markup, I must change this to margin. So markup is 40 over 100. So when markup is 40 over 100, could you kindly give me the value of margin? So let me try to simplify this for you. Will the margin be 40 over 60 or 40 over 140? Which one has got a bigger denominator? Which one has got a bigger base? Which one has got a bigger base? Margin, yes. Margin has got a bigger base. Thank you very much. Margin has got a bigger base. So if it has got a bigger base, then what I'll do, first of all, I'll come and copy 40 over 100 there. And then I bring the numerator to increase its base. I bring the numerator here, I say plus 40 here, plus 40 there. Kwa hivyo itakuwa 40 over 140. One day I remember mwanadada fulani alinishangaza. Tukasema markup is 20 over 100. Nikamuuliza sasa mwanadada, margin itakuwa ngapi? Akaniambia ni 20 over 101. Nikajaribu kuimagine ametoa 101 wapi? 101 nikafikiria. Nikajua mwanafunzi maybe maswali ambayo alikuwa anafanya yote huko nyuma, hapa juu ilikuwa ni 1. Sasa akafikiria hapa chini kuongeza 1 throughout ni kama ni formula. No, angalia Faith ameshapotea. Angalia Faith na Faith tumesema namna gani saa hizi Faith? Tumesema always margin has got a bigger base. There is no way you can subtract Faith. Could you kindly revoke that answer, Faith? It will be 20 over 100. 20 over 100, but because margin has got a bigger base, nitaongeza pale kuwe 20 over 120. Thank you very much. So hapo ni mark ya bure. Abracadabra, mark ya bure. This examiner gave me the markup. I've been able to change it to margin. Thank you very much, iPhone person. Thank you very much. But now, up to there. Are we together? Up to there. Are we together? Those yeses are nice, but they are very few. Out of 76 participants, I expected to get yes. 70 of them. Thank you very much. Now, tuendelee kusoma sasa uoye. Thank you so much. Tuendelee kusoma sasa uoye. So tukiendelea kusoma, tunaambiwa hapa sasa. Sophistic now has a margin of 40 over 140. Pedantic had sold 5,200 of these goods by 30th September. Ladies and gentlemen, that's a very good language. This examiner wants me to come and calculate what we call unrealized profit on stock. This examiner wants me to calculate unrealized profit on stock. Is there anybody who can remind us the formula of getting unrealized profit on stock? Is there any examiner? I'm calling you people examiners. For sure that now is a prophecy that all of us will pass. So UPS equals to who? UPS. Thank you very much, Nimrod. Nimrod amemaliza amesema hii ni profit margin. Hii ni profit margin times, in this case here, REES, where REES is the remaining intra-sales. REES is the remaining intra-sales. Please write that in full. Write that in full. UPS is the unrealized profit on stock. Unrealized profit on stock. Annette, thank you very much. Unrealized profit on stock. Unrealized profit on stock is profit margin times remaining intra-sales times remaining intra-sales. So you guys have told me that the profit margin is 40 over 1. If you wish, you can cancel this, but is there a need really? It's 40 over 140 times remaining REES. We had sold the goods worth 8,000 between ourselves, and by the end of the year, we were able to push the market 5,200 worth of those goods. So the remaining intra-sale will be 8,000 minus 5,200. Whatever you guys get there, I don't want to know the figure. What I'm interested in is a UPS. Is there anybody who is able to give me the UPS tonight? Is there anybody who is able to give me the UPS tonight? So Nimrod tells me it is 800. UPS you don't do. You'll get some students telling me, Mwalimu, times 6 over 12. Is your depreciation. Is your depreciation. Hii hakuna kutime a portion. Andika mahali namna hiyo kwa Kiluya. Kwa Kiluya, andika kwa Kiluya mahali. The only Luya word I know ni tawe. Sijui jina imetokea wapi na shika. I don't know. I don't know. Andika mahali hapo kwamba UPS is never time apportioned. It's never time apportioned. It's never time apportioned. Don't ever apportion UPS. And once you have gotten this UPS, could you kindly tell me the accounting treatment? Could you kindly tell me the accounting treatment? Having gotten the UPS, could you kindly tell me the accounting treatment? In the group statement of financial position, how should I treat UPS? Less it from inventory, I like that. Less it from inventory, I like that. Because basically what this means is that our inventory is overstated with that profit. Remember, it is wrong of us to maintain stocks with a profit inside. So less from inventory. But now when I move around, turn around like this, I can't see inventory here. I can't see inventory here. So in an exam, what should I do? Cry? Should I cry? I can't see inventory. Thank you very much, Agi. Thank you very much, Jackie. But mwalimu, inventory is found in current assets. So come and say minus what here? Minus 800. Say minus 800. Thank you so much. Minus 800. Minus 800. Inventory is under current. Thank you very much. Cry, then adjust. Cry, then adjust. What I'll do, I'll, like this. And then now I'll be sad a little bit, and then I move there like that. Yes. So I've been able to adjust these current assets. Thank you so much. Thank you so much. So are we together up to this? Sorry for asking you that question for many times. Are we together up to there? Great. I've never seen some students here really talking to me. I've never seen Emily M talking to me. Diana Beryl, I've never heard from you. Brian Nadit, I've never heard from you. Bahar, I've heard from Annette, Agi. Great. Ruto, thank you very much. At least you are. We have this student called Moi. Leo hajaniongelesha Moi. Kila mwanafunzi lazima aongelesha babake, mwalimu wake. Lazima. Siniangalie majina zenu. Hamisi hujaniongelesha. Ingosi Robert hujaniongelesha. Ingosi Robert, my friend, Ingosi Robert. Hujaniongelesha kwa nini? John Mweresa. This must be a man from Nyamira. Hujaniongelesha. Hata wa Malusi Lucy, mimi siwaoni ya Malusi Lucy. Hata Mary, Mary is my mother's name. Mimi siwaoni kabisa. Mjua wengi wananiulizanga baadaye, mwalimu, how do I pass this paper? Passing this paper in Zoom is how aggressive you are. How fast are you giving us answers? Right? If you're not able to get things, tell mwalimu you cannot continue. I have to understand. Right? Thank you very much. Now we go to the next thing. Following, thank you very much. Brian Dit. Hii majina mko nayo ni mzuri kusema ukweli. Majina mko nayo. Hii inafaa kasi nebu wapatie tu passes. Now we go to the next question here. 3. Other than where indicated, profit or loss items are deemed to accrue evenly on a time basis. They're putting that there to simply become verbose, to confuse the easily confusable students. So meaning that Roman 3 is a useless sentence. I can do without it. Nothing really for me there. Number 4, sophistic trade receivables at 30th September 08 include 600 due from pedantic. Ladies and gentlemen, I always keep on giving you a very good example here. Please never forget, within the family, we have a husband, we have wife. So if, for example, this morning, my wife asked me for 100,000 shillings. Akaniambia mwalimu nipatie 100, anaita mwalimu sababu alikuwa mwanafunzi wangu pia. Mwalimu nipatie 100,000 shillings. Nikishampatia jameni, do you think I'll ever recover that money from this great lady? Will I ever recover this money from this great lady? Never. You unasahau. So any internal owings within the group, they are fake. Internal owings within the group, they are fake. So I need to go, ladies and gentlemen, then to the receivables. The receivables that I took to my group, the receivables, you see, sophistic trade receivables include 600,000 from the father. Haiwezekani. So please go to the receivables and strike off that 600. So where do I find receivables here? Where do I find receivables here? Where do I find receivables here? Right? Current assets. So kwa current assets enda pale sema minus 600. Tunaenda vizuri sana. Sema hapo minus 600. Alafu endelea kusoma sentence. Ukiendelea kusoma sentence, what else are we told? Ukiendelea kusoma sentence, ladies and gentlemen, we are told here, due from pedantic, which did not agree with the pedantic's corresponding trade payable. This was due to cash in transit. Mina penanga cash in transit, the CIT in group consolidation. That one is the best free mark that is ever available. Cash in transit, ishalipwa na one company. So one company may release your pesa, lakini haijafika kwa ile company. Lakini macho ya group inaiona. So ikishaiona hiyo macho ya group, ikishaona hiyo CIT, cash in transit. Nitakuja niweke wapi hapa kwa group sasa? Macho ya group ni kubwa sana. Niweke wapi hiyo cash in transit? Cash in transit niweke wapi cash in transit? Yeah, either we introduce hapa cash CIT row, ama ukuje useme hapa cash in transit kwa current assets, useme plus ngapi? Useme plus 200. Yes, useme plus 200. 200 kama ni mimi wewe, I'm trying to demonstrate to the examiner broad and deep understanding of the subject, na kuja naeka hivyo hapo juu namwandikia CIT. Kumbuka maisha ni kustuana. Unastua examiner. Ama kasi ne baba nastuka. Kasi ne bi nastuka kweli. Kasi ne baba. Haitingiziki we shall overcome. So this is cash in transit. One company had released the money, right? Haitishiki kabisa This time round lazima itatingizika. I've passed already. You will pass, trust you me. Plus 200 like that. Thank you so much. Now, ladies and gentlemen, listen to me very well. Tuendelee kusoma hii statement. Due from pedantic, which not agree with pedantic's corresponding trade payable. This was due to cash in transit of 200 from pedantic to sophistic. Isikizeni, hizi kampuni mbili ziko na internal owings, intra owings. Tuko na sophistic receivable 600. Tuko na pedantic payable 600, but remember they are there released 200 as cash in transit. Yeye aka release, aka adjust book zake. Lakini huyu yako adjust book zake sababu hakuwa amepata hiyo pesa. Kumaanisha pedantic's payable inafaa kusoma ngapi in their books? Pedantic's payable inafaa kusoma ngapi in their books? Oh yeah, abracadabra. Pedantic, kumbuka initially the internal owings ilikuwa the same. Lakini pedantic imesha release 200. So wakabaki na 400. So then in their books of accounts they are saying, oh yeah, we have a payable to our son of 400. This is a fake payable. It's a fake payable. So this fake payable, where do we deduct this fake payable of 400 from? Where should I deduct the fake payable of 400 from? Where should I deduct the 400 fake payable? The fake payable, where should I deduct it from? The fake payable, where should I deduct from? Current liabilities, right? So from current liabilities, ukuja useme hapo minus 400. Alafu unajua ukiwa mwanafunzi mwerevu, for purpose of balancing, you see minus 600 plus 200. Somebody, what is minus 600 plus 200? What is minus 600 plus 200? What is minus 600 plus 200? It's minus 400. which matches this. Which matches this. For balancing purposes, sasa hapo tuko sawa sawa. So turudi hapa tusome hii ni nini. Sasa siku moja mwanafunzi akaniambia, mwalimu, unajua nini? Wewe ukipatia bibi 100,000, hiyo ni write off on your side. Lakini nao bibi akikupatia 100,000, atiyo lazima urudishe. And in most cases lazima irudi na interest. Is that really fair for the boy child? Ati ya bibi lazima irudi. Anakuambia ni ya chama. Atiyo lazima irudi. Hiyo ina amekopa kwa No. All ladies that we have in this case here, ladies and gentlemen, all ladies that we have in this house who happens to have given their husbands any money, please, tonight, go and tell that great husband of yours that money imekuwa waived. Courtesy of Mwalimu Aura. Tonight. Na mwambie ukweli, confess hata ikuwa ya chama, hiyo pesa nimekuachia yote. Hiyo nimekuachia yote, hata wewe burudika, usikuwe na wasiwasi, nitakuomba hiyo pesa tena. Please promise. Please promise. Please promise. Promise. You don't want to give waivers. You don't want to give waivers, you people. Why? Now come here. We are told here Pedantic has a policy of accounting for any non-controlling interest at full fair value. Now, ladies and gentlemen, itakuja baadaye. Sasa nimebaki na working moja tu ambayo ni serious. Working moja tu ambayo ni serious. Stella. Working moja tu ambayo ni serious. Na hiyo working sasa nataka utege masikio, hata sijui niandike wapi ndio uweze kuunderstand vizuri. Hapa ni pazuri. Hii working ni ya maana sana. Hii working ukishashika hii working, kusema ukweli. No, kabla working, because I would want to create some space. Hebu nipatie hizi answers. Sababu sina nipatie hizi answers. So kama PPE ni ngapi? Nipatie ni answers kwanza zote. PPE Jackie anasema ni 55,000. PPE Jackie anasema ni 55,000. Haya. Current assets, nani akona figure ya current assets? Oye. Current assets 21,200. Current assets 21,200. Nani akona figure ya 10% loan notes? 10% loan notes. 10% loan notes. Mbesha shiga na 10% loan notes. Current assets in 21,400. Sorry for that. Current assets in 21,400. Hii loan notes nimeshaona ni 7,000. Loan notes ni yep. Loan notes nimeshaona ni 7,000. Loan notes nimeshaona ni 7,000. Abracadabra. Loan notes nimeshaona ni 7,000. How about current liabilities? Is there anybody who has a figure for current liabilities? Wanasema ni 12,500. Thank you and thank you so much. You guys are great. Great. Aya. So hiyo umeniambia ni 55,000. Hii iko na working. Current assets wakuja wakaniambia ni 21,400. Great. Ingine iko sawa. Ingine wakaniambia ni 7,000. Sawa. Hiyo wakaniambia ni 12,500. Sawa. So nikuje sasa hapa nirabi ni create space yangu mzuri. Kitabu yangu ni poa. Great. So nikishafanya sasa hii ujinga yote, the next thing nitakuja hapa sasa niangalie now critically my subsidiary. This subsidiary that I acquired, was it really worth it, or I wasted my resources? And how do I assess the criticality of my subsidiary? Is to come and, ladies and gentlemen, look at the net assets the net assets of the subsidiary. Andika namna hiyo. Net assets of the subsidiary. Net assets of the subsidiary, unasema at acquisition and at reporting, ama at date of financial report. At acquisition and at reporting. At acquisition and at reporting. Now, my good students, could you kindly talk to me tonight? When somebody speaks of net assets, what comes to your mind? Net assets. You as a finance scholar, net assets is the same as who? Net assets is the same as who? Oh, yeah, niko peke yangu lakini I will overcome. Niko peke yangu lakini I will overcome. Niko peke yangu lakini I will... Thank you very much. Not fair value, Jackie. Is the same as equity. Ukisikia net assets, oh yeah, you unajua ni sawa na equity elements. Equity. Now, equity elements, you can even name them. We have the share capital. Yeah. We have the share premium if it is available. It is not available here. We have what we call retained earnings. Retained earnings, these are shareholders' monies. Retained earnings. Then we have, ladies and gentlemen, we have fair value adjustments. Fair value adjustment, and then we have what we call the depreciation on fair value adjustment. Aya, niambie kama umeandika paka hapa. Kumbuka ni at acquisition and at the date of financial reporting. Please niambie kama umefika hapa. Abracadabra, abracadabra, abracadabra. Yes. Yes. Abracadabra. Tuanza na share capital at date of financial reporting. Unaanza na hii. Share capital of which company? Subsidiary. Share capital of the subsidiary at the date of financial reports. At the date of financial reports, nikiangalia hapa, si ndio hii hapa jameni, hapa equity shares. Na sisi mimi naona hapa subsidiary sophistic. Ilikuwa na equity shares ngapi somebody? Ilikuwa na 4,000. Ilikuwa na 4,000. Thank you so much. Kutoka hapo ye, retained earnings of the subsidiary at reporting. Retained earnings of the subsidiary at reporting ni 6,500. Ah, great. At the date of financial reporting in 6,500. 6,500. Abracadabra, fair value adjustment. Is there somebody who can remember the fair value adjustment figure? Fair value adjustment is the same as revaluation. Is the same as revaluation. Is the same as revaluation. Revaluation. Hiyo ni the same na revaluation. Ni the same na revaluation. Oh yeah. Imagine from here, I'm able to sense kwamba kuna mwanafunzi amechoka, anajaribu kushikilia macho, angalie vizuri. I'll give you a secret ya kukua na energy kama yangu. Ama hata kuzidi yangu. Wewe ni mdogo nafuu unishinde. You can imagine like some of you ambao tulianza na nyinyi kutoka asubuhi kabisa. Leadership. Not leadership. Tulianza na nyinyi asubuhi kabisa at 5:30 in the morning. 5:30 in the morning. 5:30 in the morning with the AFM. And I've never not taken any break. And here I am, very strong, stronger than you, who is sitting down the whole day now on a lalala. Right? Tawapatia siri, don't worry. So fair value adjustment in the same na revaluation. Revaluation. Ambao umeniambia ni ngapi uoye? At 2,000. Aya. Unakumbuka ile depreciation on revaluation? Na ikumbuka kule depreciation on revaluation. Depreciation on revaluation. Ilikuwa inakuja ngapi somebody? 200. Thank you so much. Thank you so much. Like that. Haya. Sasa unakuja hapa hii ni haraka sana. Depreciation on fair value adjustment hii kuangi hapa at acquisition. Fair value adjustment at acquisition inakuwa exactly the same. And at reporting. Kwa hivyo hapa ni kujaza tu. Hata share capital aha. So najua kitu ambacho lazima ta compute ni retained earnings. Retained earnings at acquisition ilikuwa pesa ngapi? Retained earnings at acquisition. Retained earnings at acquisition. Remember, for us to get retained earnings at reporting, at reporting, we normally take retained earnings at acquisition plus profit. Assuming there were no dividends, assuming there were no dividends paid, assuming you retained everything. Assuming you retained everything. Whenever you want to get retained earnings at reporting, we normally take retained earnings at acquisition plus the accrued profit. Abracadabra. Ukiona hapa, retained earnings at reporting is 6,500. Retained earnings at acquisition is what I want. This is what I want. But fortunately, I have the profit after tax, your subsidiary. I have the profit after tax, your subsidiary. Profit after tax, your subsidiary, I have it. The income statement up here. You got the income statement up here, you'll be able to see profit for the year. Is there somebody who is able to see the profit after tax? Profit for the year, yeah? Subsidiary ninga pay. Ninga pay, your subsidiary profit for the year. Profit for the year, ninga pay. Profit for the year, ninga pay. Profit of the subsidiary. Hapa shetani asikuingilie uchukue profit of the parent, the profit of the subsidiary, the profit of the subsidiary. Profit of the subsidiary, wanasema ni 3K, isn't it? Profit of the subsidiary in 3K. But now there is something that you guys have forgotten. That this 3,000 is for a whole year. And you stayed with your subsidiary for how many months? You stayed with your subsidiary for how many months? We stayed with our subsidiary for how many months? 6. So now if you times 6 over 12. Times 6 over 12. Times 6 over 12. Which is the same as 15 and 0. And then, ladies and gentlemen, you take this 15 and 0 to the other side of the equation. You take this to the other side of the equation, you shall subtract. For you to give us retained earnings at acquisition. So retained earnings at acquisition na kuwa ngapi? Jackie amekuwa mwanafunzi wa kwanza kupata. Jackie nakuambia kama si vile mwezi iko pabaya. Sasa mimi nilipata mshahara tarehe 21. Akina pesa imeisha, siku hizi pesa, yani pesa haina value. Pesa haina value, pesa haina value. Ya, kama ingekuwa sio hivyo, ningekudunga hata hiyo 5,000 straight away M-Pesa. Hiyo siku hizi mambo ni mbaya. Mambo ni mbaya. Mambo ni mbaya. But we shall overcome, right? We shall overcome. We shall overcome. We shall overcome. So, ladies and gentlemen, there is one thing that you must always check. In your net asset, there is one thing that you must always check. So I want to introduce this thing. It's quite an important thing. In your net asset, there is always one thing that you must come and check. UPS. UPS. This one you must always check. UPS is normally brought in the net assets of the subsidiary if it is a subsidiary that sold goods to the parent. If it's an upward stream, if it's an upward transaction, upward from the subsidiary to the parent, if it is a sophistic, the subsidiary that made the sale, then UPS must be brought under net assets of the subsidiary because the net assets of the subsidiary have been overstated, So let's go back to the question we see. Who sold to the other? Who sold to the other? What are we told, ladies and gentlemen? Look at this. Sales from sophistic to pedantic. Sophistic is the subsidiary. It is the one that made the big jump and they sold to the parent. So it's an upward transaction. If it's an upward transaction, then the UPS has to be brought in the subsidiary. Otherwise, we don't bring the UPS in the net assets of the subsidiary. So now who can remind us? What was the value of the UPS? What was the value of the UPS when we calculated this? What is the value of the UPS? 800. Lucy has been able to remember 800. Lucy has remembered 800. Is there any other person who can remember the unrealized profit on stock? Anybody else who can remember the unrealized profit on stock? 800. Thank you very much, Rosie. Thank you very much, Steve. So this UPS, it means at the date of financial reporting, the inventory of the subsidiary is overstated. So I'll come, ladies and gentlemen, here and mention what they are, 800, like that. I subtract. So that is it. Could you kindly give me the total net assets now? Give me the total net assets. You normally call it the total NA. The total NA. The total net assets at acquisition naongeza yote, and at the date of financial reporting unanipatia figure. Please give me the figures there. Please give me the figures there. Alafu nikupatie siri ya kukua very hardworking. Nakupatia siri saizi tu, because I want my students here to really excel. To excel, do better even than the teacher. Kiswahili kinasema kinachozaliwa ni kizuri kushinda mama. Anyway, kama mama, ukipata mtoto wako ni mjinga kukushinda, you should really be worried. Be very worried. Otherwise, mtoto wako anafaa kuwa mwerevu sana kushinda, hata akiwa 2-year-old. Ukiona vile wimbo anaimba ya kizungu, unajua you at your time haungeweza kuimba wimbo kama hiyo. Hata vile ana dance, unajua sasa huyu ni mwerevu sana. Unajua ni mwerevu sana. Susan, I'll be able to repeat. I'll be able to repeat. I will be able to repeat. I will be able to repeat. Aha. So Jackie ameniambia hii ni 11,000. How about at the date of financial reporting? 11,500. And then now Susan wants me to repeat the concept of retained earnings at the end. You see, retained earnings at the end. Retained earnings here at the end, at end, equals who? Retained earnings at the beginning, where we started from, plus any profit after tax. At times, as you will be seeing, you'll be told that there were dividends which were paid. If dividends are paid, they must be subtracted. But for now, we're saying retained earnings at the end, which were how much? At the end, there were 6,000. At the date of financial reporting, there were 6,500 there. At the beginning, hatujui ini X, plus profit after tax for the whole year of the subsidiary was 3,000. But you see, this is for the whole year. And yet we stay with our subsidiary for how many months? 6/12. So then this gives us what here, somebody? 1,500. So if you take this to the other side, it will be 6,500 minus 15, which will give us 5,000, like that. I hope, Susan, that helps somehow. Great. Now tunamalizia hii swali in the next 10 minutes. Sisi wote tutakuwa tumeshatoka kwa hii mkutano. In the next 10 minutes, tutakuwa tumetoka kwa hii mkutano. Susan, is that okay a little bit? Is that okay a little bit, Susan? Susan, I'm not getting a response from you and I can't proceed. Great. Thank you so much. Great. Now, ladies and gentlemen, I would want you, bright students of God, or of us, bright, I would want you guys to tell me, what good name do we give to the difference between this and this? It is a special name we normally give this and this. Special name. Special name. That difference. It's called PAP. It's called post-acquisition profit. Post-acquisition profit. So this is called the post-acquisition profit. So then this post-acquisition profit, which is popularly abbreviated as PAP, will be 11,500 minus 11,000, which will end up giving us how much? Which will end up giving us how much PAP? PAP will be equal to how much? PAP. 500. Thank you so much. So the PAP will be 500. It's called the post-acquisition what? Profit. Anytime you have some post-acquisition profit, remember what we always agree. Anytime you have any post-acquisition profit, it must be shared between the two owners. Please share these out. Go ahead and share it out to the two owners. So share the PAP. Share the PAP. So go ahead and share the PAP. Go ahead and share the PAP. So we are sharing the PAP. So share of PAP, share of PAP, share of PAP. So we have in this case here the parent company. The parent is 60%. The parent is 60%. So 60% of 500 gives us what here, somebody? Remember it's share of PAP, which is $500. So 60% of 500 gives me 300. Thank you so much. And then we have NCI. If you're able to remember the percentages, NCI is 40%. So 40% over 500 gives me how much? 200. So what do? Come to your balance sheet where you are seeing NCI, give them their share, say here plus 200. Where you are seeing parent, of course, parent is the group share. Where you are seeing in this case that 300, bring it to retained earnings of the group, because PAP affects retained earnings of the group. So here plus 300, like that. So please confirm to me whether you have taken those PAP shares to their respective accounts nicely. Please confirm after you got this. So you're saying that the parent, take this to the group, retained earnings. Take this to the group, retained earnings, like that. Thank you very much, Agi. Thank you very much, Agi. Kuna Richard sijamsikia, kuna Purity Kiari sijamsikia, abracadabra. So you share like that. So after that, the last working that I need, ladies and gentlemen, now is the working of your goodwill. So now come and do the working of what here? Goodwill. Come and do the working of goodwill. So how do we get goodwill? How do we get goodwill is very easy to calculate. To get goodwill, we normally take the parent's consideration. The parent's consideration. We come and add the NCI's consideration. Ongeza namna hiyo, unapata the total consideration. Alafu unasema less net assets at acquisition, the figure that you had of 11,000. Net assets at acquisition. Upper. And then now whatever you shall get here will be called what here? Goodwill at acquisition. Right? The figure you shall get here. Aya, abracadabra. Hata naweza nikaanzia hapa. Net assets at acquisition, I can remember 11,000. Net assets at acquisition. Are we able to remember these net assets? Ile table tulichora mbili at acquisition net assets. Are you able to remember the 11,000 at acquisition? Imeanza kuchoka sasa wanafunzi. Thank you so much. Yes. How about NCI consideration? NCI consideration is NCI at acquisition. Is there somebody who can give me the NCI at acquisition? NCI at acquisition from this particular note. NCI at acquisition. NCI at acquisition from this particular note. NCI at acquisition from this particular note. NCI at this one here. The fair value of NCI is 5,000 at acquisition. Remember, 5,900. Great. 5,900. Great. So here NCI consideration is 5,900. So I'm only looking for one parameter, which is the parent's consideration. Parent alipeana pesa ngapi for the 60% shares? Parent alipeana pesa ngapi for the 60% shares? No worries. Look at these. No worries. Look at these. Tunaambiwa hapa juu kuna parents consideration. Wanapeananga pesa, sasa zingine unapeana shares zao. Tunaambiwa on 1st April 2018, Pedantic acquired 60% of the equity share capital of Sophistic in a share exchange of 2 shares in Pedantic for 3 shares in Sophistic. Great. So I would want you guys to tell me the number of shares that Sophistic has. Tuanzie ni kwanza hapo. The number of shares that Sophistic has. I would want you guys to tell me the number of shares that Sophistic has. Please go to the balance sheet of Sophistic. Go to the balance sheet of Sophistic, and then you tell us the number of shares that Sophistic has. The number of shares that Sophistic has. The number of shares, I can see these very first. To get number of shares, we normally take the share capital divided by par value. They are telling us something very nice. To get what we popularly call the notes, we normally take the share capital the share capital divided by the par value, divided by the par value. No stands for a number of ordinary shares. No stands for a number of ordinary shares. So you can see the share capital of this company is 4,000 of the subsidiary member. It's 4,000. The share capital of the subsidiary here, the share capital of the subsidiary here, the share capital of the subsidiary. You're able to see it. It's 4,000. And the power value has been given here as $1. So in this case here, divided by 1. So the number of ordinary shares of this particular subsidiary is 4,000. 4,000 shares is 4,000 shares. Is 4,000 shares. And out of these, the parent acquired how many shares? Out of these, the parent acquired how many shares? The parent acquired how many shares? They have given us the percentage. They have told us that the parent acquired 60%. So right there for me, shares acquired by the parent. Shares of Sophistic acquired by the parent, right there in full. Shares, right there in full. Shares of Sophistic acquired by the parent. So in this case here, we acquired 60% of 4,000, which gives me 2,400 shares. So Sophistic gave out how many shares? 2,400 shares to the parent. I love this. Look at the share exchange. Look at the share exchange. The share exchange, I would want to know, because the parent gave out shares instead of money, I would want to know the parent now gave how many shares in return. This is quite critical for me. Look at this, ladies and gentlemen. What they have told us here, which is quite interesting, they have told us here, on 1st April 08, Pedantic acquired 60% of the equity share capital of Sophistic in a share exchange of 2 shares in Pedantic for 3 shares in Sophistic. I love this. 2 shares of Pedantic equals 3 shares of Sophistic. Let's repeat this again. 2 shares of Pedantic, 2 shares of Pedantic, 2 shares of Pedantic equals 3 shares of Sophistic. And we are aware that we bought 2,400 shares of Sophistic. 2,400 shares of Sophistic then will be equivalent to how many shares of the parent company? Hapa najua nitarudia mara 2 3, sio mara moja hata, najua turudia mara 2 3. So ukicross multiply hiyo hii itakuwa 2 times 2,400 divided by 3. EV divided by 3, which somebody is telling me that the parent gave out 1,600 shares. So please write for me there in a sentence that the parent gave out 1,600 shares. The parent gave out 1,600 shares. The parent gave out 1,600 shares. So this is their consideration. The consideration of the parent was what here? 1,600 shares for a 60% stake. Now listen. Now here we are calculating goodwill. Now we are calculating goodwill. Where goodwill, we are looking at the consideration that was paid by the parent. Consideration paid by the parent company. Umesema ni 1,600, and fortunately they'll give you the market price of the shares. You must know the parent's value of share. They have told us in the question. They've told us in the question that at the date of acquisition, shares in Pedantic had a market value of $6 each. So times 6. Each share here is times 6. Or rather, each share is $6, so times 6 to get the total. Who can give me this figure? The consideration that was paid by the parent. Jackie tells me 9,600. Jackie tells me 9,600. Is there anybody else who is able to see that 9,600? Rosie has confirmed that. Any gentleman who is able to see that figure of 9,600? Thank you very much. Now come and add the consideration or NCI's consideration. NCI at acquisition. of which you guys gave me 5,900. Could you kindly add here for you to give me the total consideration? Kindly add for you to give me the total consideration. What figure are we getting there, somebody? So 15,500. 15,500. So come on, the less net assets at acquisition. Less net assets at acquisition, which you guys gave me some figure. Less net assets at acquisition, which you guys gave me some figure. Are you able to remember the figure that you gave to me? It is 11,000. So when you subtract like this, you're able to get what we call goodwill at acquisition. So goodwill at acquisition, what figure do we have? Goodwill at acquisition, what figure do we have here? It's 4,500. So come here and subtract impairment. Loss in value of goodwill is called impairment. If you remember impairment, there was zero impairment. So this means that goodwill at reporting is 4,500. Goodwill at reporting. They told us somewhere down here. They told us somewhere down here that goodwill was not impaired as an asset. Goodwill was not impaired at all. Yes, they told us that. But unless I'm dreaming, they told us that. They told us precisely that the fair value of NCI like that, consolidated goodwill was not impaired as at the date. No impairment laws. No impairment laws. So 4,500 is what I expect you guys to bring here. Goodwill 4,500. Goodwill 4,500. So first of all, up to there, I'm so sure I must have lost most of you. That one I know. But at least have you been able to write something up to where we have reached? Please give me responses there. Have we been able to write something up to where we have reached? All right. Thank you so much. Thank you so much. Great. So then what I'll do, I'll come straight away here and rub this. Now, there is something that has just come to my attention that will be very important. This is the last thing. It will take me less than a minute to finish. So remember, you've told me that the parent gave what? The parent issued 1,600 new shares. At what price? At $6 per what? Per share. But now remember that this $6, $6, ladies and gentlemen, $6 has got two components. The components of this $6, is there somebody who can see what the par value is? Is there anybody who is able to see what the par value is? Anybody who can remember from our balance sheet what the par value is? Anybody who can remember from the balance sheet what the par value is? It's 1. So the par value is 1. The par value is 1 from the balance sheet. They told us from the balance sheet, from the balance sheet, from the balance sheet, from the balance sheet, from the balance sheet. Here the par value is 1. Thank you. Thank you. Thank you. And thank you so much. So the par value is 1. So then what name do I give to this 5 for me to get 6? Amount issued over and above the par value. Amount issued over and above the par value should be given which name? Share premium. Thank you very much. So share premium is 5. So then do me a favor. Please come and give me totals here. I know the par value is 1. So for 1,600 shares, it will be 1,600. 5 premium per share times 1,600. It will be what here, somebody? Is it 8,000? Yes. For us to get 9,600, this figure. This figure. Thank you very much. So remember that these shares that were issued belonged to who? Belong to the parent. These 1,600 were a new issue of shares of the parent company. So it means that our equities must be affected. So please come to the share capital of the parent only. Niongeze 1,600 hapa. Hii itakuja 9,600. Hii itakuja 11,600. Niongeze hapo. Because in your parent, we said in the group, In the group, kidogo kidogo relax. In the group, oh, mwalimu read note 5, last statement, or do I have a wrong question? Do I have a wrong question? I believe so. I believe you have a wrong question. Check the question that we have here. Check the question that we have here. Hakuna any other note. Throw the one that I given you in the last class. Throw that one. It was quite simplified. How to get the original one. So this is the question you're supposed to be having, ladies and gentlemen. This one does not have any impairment. Great. Thank you so much. Aya. So sasa ya mwisho kabisa kuja squeeze share premium hapa ndani squeeze. Andika share premium hapa ndani squeeze share premium. Uandike share premium ni ngapi somebody? Share premium ni 8,000. 8,000. Share premium ni 8,000, and now that is the end of that question. So then I would want you guys to kindly give me the total assets of the company. Give me the total assets of the company. Please add for me. My figures are not so nice. Add for me and give me the total assets of the company. Is there somebody who can do that? Total assets of the company. Is there somebody who can do that? Somebody who has theirs in one line nicely. What are we getting to be the total assets of the company? Please remember to include goodwill. Remember to include goodwill. Melalisa, she's giving us 8,900. Any other person who is able to confirm this? Thank you so much. How about total equity and liabilities? Can somebody add these entire things? All of them. Total liabilities, total equity and liabilities. Somebody add all of them. From the share capital, you add all of them, and then we get to see whether we are getting the same 8,900. Whether we're getting the same 8,900. Whether we're getting the same 8,900. Can somebody confirm that? Total equity and liabilities. Jackie is giving us total equity and liabilities. She's organized her work very well. She's giving us the total equity and liabilities as 8,900. Total equity and liabilities 8,900. Who are these students who don't want to clap their teacher and yet the balance sheet has really balanced? Or don't you guys know where claps are? In Zoom? Or must I request you to clap for me? we shall overcome. So 8,900, like that, 8,900. And then we thank you very much. Thank you very much. I never knew they would come flowing that way. Thank you very much. Thank you very much. Thank you very much. Thank you very much. Now, ladies and gentlemen, I would want you guys to do me one favor. I would want you guys to do me one favor. You see how I have done that question? I would want you to go and put a solution here, and then you start doing the question again slowly as you make reference to the solution, as you make reference to the solution, so that when we meet in our tomorrow's early morning class, remember tomorrow I'm meeting you at 5:30 in the morning. I would want us to be using this format throughout in all our group consolidation questions. In all our group consolidation questions. Thanks, Agi. Great. I'm the best. Thank you. Great. Ladies and gentlemen, please, tomorrow we are meeting at 5:30 a.m. I would want you to use like 30 minutes today to simply analyze this balance sheet the way Mwalimu has done it, this format. Otherwise, thank you very much. Please be blessed. Be blessed. Be blessed. Be blessed. Now I can take this opportunity to read a few questions as you guys share the question. I've already shared the question. I've already shared the question. I've already shared the question with you. Kuna maswali ilikuwa imeulizwa huko juu. Let me strive. No, it is not a free class. That class you have to pay. Now pay. You pay 3,500 shillings. You pay 3,500 shillings, ladies and gentlemen. The moment you pay the 3,500, you get access to our normal class. Thank you so much. You get access to our normal class. There are questions that I needed to answer here. Please, these are good resource. Don't let this good resource achoke sana bila kulipwa, please. And I'm the only teacher who does this for you many times, but also try to motivate mwalimu. Please, please pay. Please, please pay. So I haven't seen any questions there. How many lessons do we have? 4 lessons in a week. 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 Haya, endelea tu kuuliza maswali. Endelea kuuliza maswali, zote nitajibu saa hizi kabla utoke. Kabla utoke, angalia maswali. Angalia maswali kabla kuenda. Okay, so I'm going through your questions. Remember, this is a great semester. It is a do or die semester. This is a great semester. This is a great semester. So it's a do or die semester. We must, ladies and gentlemen, just do it. We don't have a choice. We must pass. We must pass. That is why we have how many sessions in a week? 4 sessions a week. Mr. Norbert is teaching you guys how many sessions? 3. And I'm only teaching you 1 session. My role in your class, the ones who are in the normal class, is to teach you group consolidation and group cash flows only. Mr. Norbert will be able to teach you all the other things. For the students who are in the special revision classes, I'll be teaching you myself thrice a week in the SPR class, right? All in all of us in this case here must do what here must pass. Revision kit, how much? 1,000 bob only, 1,000 bob only. 1,000 bob only. How do I pay to the 3-5? Ah, great. Now I'm getting somebody who wants to promote more. This is the best student. Only best student. Only best student. Sijui kama mwanafunzi alikuwa akiandika Mary inaweza vuta hii pande hii. Kama ndio unataka kucopy hiyo, move to the left, move so this side. So it means hii ndio navuta. Hii ndio navuta hii Mary. So the one who wants to pay us immediately, this is our pay bill number. This is our pay bill number, very easy, 4029-569. And then we have account, is your name. And then of course, once you pay, you send the payment message to 0719-525,000. 0719-525,000. 0719-525,000. The 1,500, Lucy, is the book. You know, we have the book and the revision kit. Revision kit is 1,000. Is 1,000. Is 1,000. Any other question? 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 No, zimekuwa mingi. Sasa revision kits zimekuwa mingi. Zimeingia kwa market sasa. Tulichelewesha kidogo na sasa zimeingia kwa market. Ebu uliza tena, hizo maswali ni mengi. Uliza tena Marieta. Kesho class ni 5:30 am. 5:30 am. Kesho class, ukishalipa class ungojea link kwa paid group ni 5:30 am. 5:30 am. Great. Alafu unajua my approach ya group consolidation. Hapana Emily, hatukuanza leo, tulianza class yenu ilianza kufunza group consolidation mapema Emily. Ilianza mapema kidogo. You are to share about the new and the old syllabus. New and old syllabus. Now the old syllabus is coming to an end this August. The new or not new, but those old syllabus students have only 1 bullet, which will be ending on this August sitting. If you fail, God forbid, if you fail, it will take you 2 years to finish your CPA. If you fail, it will take you 2 years for special revision class. Hapana, hatujachange timetable. Hebu angalia vizuri Marieta, angalia vizuri timetable yako. Angalia vizuri timetable yako. Hatuja change. Pay bill is 402,956.9. And then our account number is your name. Phone number is 0719-525,000. Today I'll be a rich man. But I also do a lot of work. Susan ameweka AFM question mark. Minafunza zote. Jackie anauliza why 2 years. Tupe timetable ya SPR ya special revision class. Hiyo sasa nitawatumia kwa WhatsApp. Lakini remember Mary, SPR inafaa kwa wanafunzi ambao walifanya wakarudia. I call them the repeaters but in good faith. Usha cover syllabus before you join SPR. You had promised to do so. How are you going to assist me then? Because I have both AFR and AMA at the same time. How comes? Marieta, I'm the same person who is teaching AFR kwa special na AMA. There is no way I can be teaching AMA and I teach AFR at the same time. Haiwezekani. Wewe uko na wrong timetable. Susan nauliza AFM ya 8 to 10 kesho. Yes, hiyo iko bado. Why 2 years? You know, there is quite a lot of issues outside here regarding this new syllabus. Quite sad for you. I never wanted to tell you this, but now that you're insisting, I have to tell you. So assuming, for example, God forbid, you fail AFR in this August. So it means you will have to go to December sitting. So December, first of all, you do that AFR 1 paper, you pass. After passing, we only allow you to do the data analytics project after passing. It means you will go to 2023, April, for the data analytics project. After passing the data analytics project, we would want to ensure that you guys at the workplace are doing accounting roles. Would want you to go into internship. So internship should be over how many months? It's a term, 3 months. So it means that all the way to August, 2023 August, you'll be doing internship. Even if you're working, would want to come and inspect you at the workplace. So we'll need those 3 months to come round. And then we give you a pass for internship, depending on the skills that you have acquired, right? So after you pass like that, then we go to 2023 December, you will have to sit this sitting. You sit for the seminars. ISPAC seminars, there are 2 of them. There are 2 of them. So these two seminars with ISPAC, you will do. So ukihesabu kutoka leo, hebu hesabu vizuri na uassume utaweza anguka kitu moja hapa katikati, sababu class is a straight line. Are you able to see, ladies and gentlemen? That straight away there is a possibility that you could easily stay. If I were you, I would really work